Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and today we're getting an update on Elemental Royalty Corp. Elemental Royalty Corp is traded on the TSXV under the ticker ELE and on the NASDAQ under the same ticker ELE. And we're joined today with the CEO, Dave Cole. And Dave, it's great to get you back on the show. When we last chatted, it was with Fred back in September. And a lot has happened with the two companies coming together. Now the new Pro-Forma Elemental Royalty Corp, the merger of Elemental Altus Royalties and EMX Royalty Corp together at last. And so
Yes.
congratulations on the big board listing up to the NASDAQ. And then now the company combined has 16 cash flowing assets, 34 development stage assets, and over 200 royalties in your portfolio of projects. So I guess just from a high level, Dave, give people listening that may not be familiar with the new combined company the overview of this
Yeah.
new juggernaut in the royalty space.
Well, my pleasure to be back speaking with you, Shad, and certainly just delighted with the combination of these two companies, EMX Royalty Corporation and Elemental Altus, to form the new Elemental Royalty Corporation, bringing these portfolios together, creating critical mass within that portfolio, and of course, the market rewards scale in the royalty business. And so we do expect our valuation per royalty revenue to go up over time here, and it presents a nice investment opportunity. I'm even more excited about bringing together these teams, and there's a lot of cross fertilization. The Elemental Altus team, very strong on the banking, finance, and capital market side, and the EMX Royalty Corporation team, very strong on the economic geology, entrepreneurial spirit, and engineering talent side of the business. And these two come together very nicely. Both teams and now the conjoined team have been exceedingly productive through the merger process and coming out of the backside. And you can see that from our press releases and the number of deals that we have executed.
Yeah, Dave, it's an exciting time for the company, and we've been following both teams here at the KE Report for years, I think 4 or 5 years each. So nice to see the band getting larger and all the different skill sets complementing each other. I wanted to dig into Q3 financials, but I know that's a little difficult between the two companies. Maybe you can just give us a snapshot of what you expect in Q4, but maybe more importantly, a rough idea of what you see coming forward in 2026.
Yeah, it's easier for me to talk about 26. The financials are complicated by the merger and merger accounting. The last report that came out for Elemental was Elemental Altus only. So we've not yet had a quarter with the combined companies, but we will going forward. But let's talk about that go forward look. And the analysts using much lower commodity prices than we have today, I'll point out, believe that we'll have about $89 million in top line production royalty revenue, exclusive of property agreement payments in 26. And so that's a nice uptick. And when you look at the combined pro forma revenues of both entities, backward looking and forward looking, it's a very, very nice curve upward as both companies created and the forthcoming merged company will continue to have this organic growth within the portfolio with the added benefit of continued acquisition and portfolio growth from our ongoing activities. So we're in a position now where we should drop well over $50 million in cash flow to the bottom line. And the merged company, I'll point out, has no debt, has $50 million in cash and gold in the bank, the 89 million plus other payments, revenues coming in, dropping $50 million to the bottom line. We expect to have a new revolver with a syndicate of Canadian banks put in place shortly, giving us roughly $150 million in firepower from potential loans from that revolver to be able to acquire more assets. So the combined number there, $200+ million, that puts us into a league that we've not been in previously, which speaks to our business model moving forward. We will continue to do what we've always done very effectively, and that is to generate royalties through royalty generation. That puts smart geologists and engineers in the mineral belts around the world also identifying opportunities to buy existing royalties. And both companies are quite astute at that, at finding ways to buy things accretively and then Thirdly, look at royalty financing opportunities. And this is where we now have more firepower. So we'll be able to look at larger royalty financing opportunities than we have in the past, helping to accelerate us into the next tier of mid-tier royalty companies. And then fourth, and probably lowest on the list, would be looking at continued M&A. I don't believe the timing is right today. And my general view with respect to M&A is that I'm not in favor of it until we find a candidate that changes my mind. So those are the mechanisms whereby we will continue to grow this portfolio and have a track record of doing so very nicely and allocating capital appropriately for over 20 years.
Well, that's a great synopsis, Dave. And so really a quadruple pronged approach here. You can still keep generating the royalties through the model that you've been so successful with on the EMX side by using your geology experience, sourcing deals and finding fits for other companies. You also can still keep acquiring royalties. You can even look at the royalty financing, as you mentioned there, which is like creating new royalties. And then if the mood strikes you and you find the right fit, of course, acquisition still on the table. But that is a lot of firepower for the combined company to have the cash and the upcoming revolving credit facility. Let's talk a little bit about the assets in place currently, though. Maybe give us a outline on the diversification that you have across multiple continents now, but also multiple metals.
Yeah, happy to do so. And I have to pinch myself. I'm so excited about some of the assets we have here and the assets that we've brought together. I'll start off in North America. Leeville, operated by Nevada Gold Mines, not our largest royalty, but a nice one. And that sits on a nice chunk of the northern portion of the Carlin Trend and one of the most endowed gold regions in the United States. And that royalty right now is paying at a rate of about six or a little more than $6 million a year. We expect for that to go decades into the future. And that's a nice asset to have. The Cactus copper discovery in Arizona is an example of where both Elemental Altus and EMX owned royalties over a portion of that deposit. Now together we have full coverage of that deposit. That's good. That's a copper deposit that'll be in production within a few years on private property in Arizona, and excited to have that. And that's an example of, you know what I think about this. The discovery optionality is why we're in the royalty business. And that's a great example of discovery optionality coming to fruition. Another example is the Peak copper, zinc, silver, gold system in Arizona as well. And that's being advanced by South 32. But moving on to some bigger royalties in South America, our largest current cash flowing royalty is the copper and molybdenum royalty at Caserones, operated by Lundin Mining Corporation. At Caserones, Lundin Mining Corporation purchased 75% from JX Nippon. JX Nippon was doing a good job. Lundin's doing a great job. And they are increasing production to nameplate capacity that had not been achieved previously at this porphyry copper and molybdenum deposit in northern Chile. And so we're looking forward to some production increase from that. But even more importantly, Lundin put $14 million into exploration drilling in 24. They're putting $22 million in 25. And they keep bragging about what they're finding there with high-grade copper breccia zones from in-pit drilling within the mine itself at Caserones, and a whole new porphyry system that they're delineating at Angelica immediately next door, well within our overall royalty footprint. Our overall royalty footprint in the Caserones district is substantial. On a size basis, it's actually comparable to the city of Phoenix, so which is a classic example of urban sprawl in the western U.S. So it's a nice, big, chunky footprint, and we're just delighted to see Lundin going to town there and finding more copper. That's why we want to be in the royalty business. And then on the precious metal side in South America, we're delighted to have a 1% uncapped, unbuyable royalty on the advancing silver gold deposit at Diablillos, operated by Abra Silver. And Abra Silver is a stock worth paying attention to. We think that they're onto a real ore body there that will go into production, and will go into production probably within the next few years, as Argentina has become a favored place for capital investment now and has put in place tax incentives for that mine to be fast-tracked to production, or that deposit to be fast-tracked to production to a mine. And we're delighted to be along for the ride there. We purchased that royalty quite inexpensively and are in the enviable position now where we've got a tiger by the tail. Moving on to Fennoscandia, that's been an area of focus of mine for a long time. And we're one of the largest mineral rights holders in Fennoscandia, Norway, Finland, and Sweden. The next production royalty that we will have will come from a mine in that region in the northern portion of Sweden, what we call the Kiruna district, a district known for its world-class iron deposits. There are also copper mines in this district, and this is a copper iron gold deposit that is coming back into production, and we're delighted to have exposure to that. That will be a multi-million-dollar payer within a couple of years, and we'll see some incremental royalty revenues in 26 from that deposit. Interestingly, we also have a royalty on one of the best graphite deposits being advanced in the world today for those folks that are interested in battery components and minerals associated with battery development. And we're very pleased to have that royalty. That deposit has received some nice governmental support and funding. As you'd expect these days, the governments are putting money behind these battery metal opportunities. Moving further south in Europe, we'll come to Timok. And Shad, you and I have talked about Timok many times. This is a flat out company maker in our portfolio. And we're very, very, very fortunate to have exposure to this district, one of the largest ongoing copper gold development stories and discovery stories in the world today, operated by Zijin, the large Chinese multinational copper focused mining company. And Zijin's doing a fabulous job there, getting metal out of the ground and fast-tracking development of 4 ore deposits that have been discovered within our royalty footprint. We have multiple royalties within the Timok complex, and this is a well-endowed region. Multiple discoveries are being made within this belt by other companies besides Zijin, including the Zijin lion's share of the district. And right now, that royalty is paying us about $6 million a year from production from the 2 upper zones, quote unquote, and they're high grade zones that are running, the ores are running through a 15,000 ton per day mill. That's separate from the development of the lower zone, which is gargantuan. Zijin has published a 66-year mine life. They've moved most of the resource into reserve, and they have started construction of a 125,000 ton per day mill. Despite the immense size of that mill, this deposit has a 66-year mine life, and the total resource is approximately 2.5 billion tons at close to 1% copper equivalent. That's about 0.87% copper and 0.16 grams per ton gold. So this is a very, very, very nice deposit. And then just to pour gasoline on the fire, there's another deposit that they have announced about a year ago, a little less than a year ago, called the MG Zone. And this is one of the higher grade copper gold discoveries ongoing in the world. The maiden resource is 150 million tons at 1.87% copper and 0.61 grams per ton gold. There's currently 12 drill rigs turning on that deposit, and we're just delighted. We have a chance once a year to go and tour site, and they always are excellent hosts and have a great time talking to the geologists, engineers, and the finance people on the ground at Timok. It's one of the most modern mining operations I've ever toured in my life, and we're just tickled pink to have royalty coverage over all 4 of these deposits. Moving from there into Turkey, Shad, you've heard me talk before. Obviously, I've been working in Turkey a very, very long time, a chunk of my career. And we have the lead, zinc, silver Balya royalty that's paying last year about 1.5 million. This year it will come in about 2.5. And next year, I think it will incrementally increase, partially due to very nice silver prices that we have today. I'm delighted to see the silver price where it is, but also thanks to increased lead, zinc, silver ore production from that deposit. And then the Gediktepe mine, which has been a phenomenal cash flower for us. Shad, and you and I have discussed this before. We knew that the upper gold silver zone, which was paying us over $1 million a month for a while, would play out over time. That was a finite deposit, and that will nearly come to its end this year, this month, in fact. However, they are developing quickly and have the funding to develop the sulfide zone at depth, which this mine goes from a gold silver oxide zone to a copper lead zinc silver gold polymetallic sulfide zone. It's a volcanogenic massive sulfide deposit, is the geological term for that. And delighted to have exposure to that. We have a 2.25% royalty on that sulfide zone, and that will uptick over the course of the next couple of years and become a multi-million-dollar per annum paying royalty. Yeah, and then from there, I'll move on to the fine assets that we have in Western Africa, gold assets paying handsomely, and we're very pleased to have that strong gold exposure. You move to Australia, we have the Karlawinda deposit, which is one of the cornerstone assets in this portfolio and came from the elemental Altus side. We're seeing increased production from that and increased resource growth on that deposit. That's a key asset here within this portfolio. And when you talk to Fred, the chief operating officer of the company, he'll point out that these cornerstone assets like Caserones, Timok, Karlawinda, and Laverton, which I'll get to in a minute, these are assets that you would see in a major royalty company's portfolio. And that's what we have here. We have a portfolio that is the basis for this to become a major royalty company. These are assets that are coveted. And, frequently I have people asking me to sell a royalty or a portion of our royalty portfolio. And of course, the answer is no, we're not in the business of selling royalties. But I just thought I'd throw that in there. But next, I'll touch upon Laverton, the other cornerstone asset. And that one is not cash flowing today, but this is a exceedingly well-endowed district in Australia. And we have multiple royalties now. The boys added on a nice new royalty there to augment the position that we had previously. So our royalty rate varies between 2 and 4% with multiple mineral zones, gold, that are being developed and fast-tracked towards production. That'll become a producing royalty within the next couple of years and likely have an exceedingly long mine life. So all of these things accumulate together. As you said, there's over 200 royalties in the portfolio, so of course I can't touch upon them all, but this portfolio is benefiting from discovery optionality coming to fruition with over $100 million in exploration drill holes, advancing our assets worldwide at no cost to us. That's the beautiful thing of having a royalty. And also discovery optionality and also production optionality, where various mining operations are incrementally increasing production. And Timok certainly is a phenomenal example. After they get into the lower zone at Timok, going back to Serbia, that lower zone will cash flow to us well in excess of $15 million per annum as they get to the 125,000 tons per day mark, of which they are building the mill today. So that's something for us to look forward to. Our cash flow projections will likely increase.
Well, Dave, that was a wonderful tour, really, through the world and looking
That's
at
right.
all the
Yeah.
different royalties the companies have. Of course, highlighting some of the flagship royalties and cornerstone royalties like Caserones, Timok, Karlawinda, and the Laverton transaction the team just closed. Now, we have talked about a lot of those assets before with both companies, and I think there is a very strong portfolio there, not just of cash flowing royalties, but maybe speak very briefly about the fact that you get a lot of one-off payments or a lot of milestone payments or stage gate payments. So talk about the other way the company generates revenue.
Yeah, we've had a history of making strategic investments, equity placements into companies where we saw opportunities for significant upticks, and some of those have been outsized wins. And that's a nice secondary income source for the company and has been for decades. Then on top of that, many of the deals that we write and some of which we have purchased have pre-production payments. And pre-production payments is a great way to add value to a royalty document. Royalties are phenomenal financial instruments with this immense embedded optionality that I keep referring to. And a way to enhance that and add another aspect of optionality is have pre-production payments that are either stage-gated on advancement of a resource or just time-based. Every year you have to make an annual advanced minimum royalty payment. And both of those and other methods for money coming in the door have been beneficial to the company over the years in helping us grow both of the individual companies that came together and even more so now as a combined entity.
Well, Dave, another question I want to get you to field here, just as we're starting to wrap up, is the relationship with Tether. I've gotten probably two or three dozen questions about this, and it's too much to get into in an expanded way, but just in a general sense, remind people of the relationship, why Tether Investments positioned in both companies, and how that helps the strength and the firepower of future acquisitions.
Yeah, well, first of all, just for those people that don't know, let's remind folks or inform folks as to what Tether even is. Tether Holding Company is the company that's a shareholder in our company, and Tether is the largest stable coin company in the world. Stable coins are used; they're a crypto instrument, and a token is issued. $1 is paid for that token. That US dollar goes into treasury bills to back the value of it and thus create a stable valuation of that coin. And these coins or tokens have become immensely popular. There's now $180 billion worth of Tether stable USD out there today that's being used by currency traders, commodity traders, because of its liquidity and ease of movement, right? And it's usurping traditional banking. It's potentially disruptive to the whole banking business. It's rather phenomenal. And the way that Tether makes money is that they own these T-bills to create the stable value of the USD token. And the T-bills, of course, pay 3 to 4% interest rate today. And so they're making the interest rate, whilst all these folks have all these stable coins, not dissimilar to a dollar bill in your wallet. They have stable coins that can be transferred from wallet to wallet seamlessly and for free. So people love to use these because they're much easier than traditional banking, as I said. And in the meantime, Tether is reaping the rewards of the coupon on the treasury bills. So Tether is now making close to $20 billion, Shad, a year in profit from this business model. It might be the only business model in the world better than the royalty business. And so they're looking for ways to allocate that capital. Well, I bet you can guess what they're doing. They're buying gold. And they are buying gold now, it's been publicly disclosed, at the rate of 3 metric tons of physical metal a week. They're taking delivery of all the gold they buy, which is very different than most people that own gold. It's a line item in their brokerage statement, which is really the obligation for somebody to pay them what gold is worth at some point in time, which is not the same as actually owning the physical gold. So Tether is taking delivery of 3 tons a week. 3 metric tons a week. It's hard to believe, right? And they're taking delivery, and they own bunkers in Switzerland that they bought from the Swiss Army and have hired the Swiss Army to guard those bunkers. And so they are just accumulating rapidly gold, largely because of fears over fiat currency devaluation. And if you think about it, they're very bullish on gold, and they are also buying farmland. What's the next best thing to own? Might be even better than a bar of gold in the bank, and that's a gold royalty, because they're the gift that keeps giving. You know, you buy the finite amount of gold that's in the ground. Say there's a 1,000,000 ounce deposit with a 1% royalty, that you know that metal will come to you at some point in time as that deposit is produced. But then in the meantime, the geologist finds another 1,000,000 ounces, and bada bang, your gold bar got bigger. So they know that, they understand that, they know that royalties is a phenomenal business model. And so they came in and bought a substantial chunk from a couple of sellers in Elemental Altus. Literally within a couple of days of that being announced, I flew to New York and met Juan Sartori, who is the chief investment officer with Tether Holding. And Juan said, David, why don't we put these companies together? And I said, well, Fred and I have been talking about this for well over a year now. Let's do it. And so that was the catalyst for us completing a transaction that Fred and I were already of the ilk that we thought that we should do this anyways. And very pleased to have their support. I'll point out that at the point of merger, Juan and Tether put in another $100 million financing into the combined entity, putting in this position today where we have strong cash balance, no debt on the books, a key strategic shareholder. And Juan just wants us to keep doing what we've been doing for 2 decades, and that is allocate capital astutely within the royalty space and continue to gain scale and mass to our good business.
Well, I think that's a great synopsis of both Tether and their desire to be positioned in not just treasuries and gold, but also gold and silver royalties. So, a great outline of the new Pro-Forma company, Elemental Royalty Corp. A great tour through the world of all the different assets, and we'll definitely be following along with the development and the news at a lot of those assets. We'll dig in next time on a little more detail and maybe a couple of the partner projects and a great way to look forward to 2026 in this new combined mid-tier intermediate royalty vehicle. So, Dave, always great having you on the KE report. For those listening in, if you want more information on Elemental Royalty Corp, definitely click on the link down below in the show notes. It takes you right over to the Elemental Royalty Corp website, straight to their news section where you can dig into some of the recent news, but also more importantly, follow along with all the news to come, future acquisitions, future generative deals, and definitely future revenues from quarter to quarter as we look ahead to the next year. Dave, as always, looking forward to our next conversation.
Chad, I look forward to it as well, sir. Thank you.